Hey guys, my name is Divyang Patel and welcome back to my channel Patel in Canada. I hope you will find my videos valuable, so don't forget to like my videos and subscribe to my channel. So let's begin now. Today I will be cracking down all the basic details about RRSP, such as what is an RRSP and how to invest in your RRSP to minimize your income tax and maximize your long-term growth. I will also explain the investment options, benefits of an RRSP, contribution limits, withdrawal rules, and the rules regarding the tax deductions. So make sure that you watch this video until the end to fully understand the RRSP. I am assuming that you have a basic understanding of Canadian taxable income tax brackets and deductions. If not, then you can watch my Canada Taxes Explained video by clicking the above link. So make sure you check out that video first and then come back to this one for a better understanding. RRSP means a registered retirement saving plan, which is registered with the Canadian federal government, and it is one of the most important tax sheltered accounts available for Canadians along with the TFSA. The RRSP was designed to help Canadians plan for their retirement, so it is meant for a long-term investment. The name Registered Retirement Saving Plan is a bit misleading because it's not actually a savings account. Instead, it is an investment account to grow your retirement fund. So the first half is correct, but it should not be used as a savings account. RRSP offers two main benefits. First, it allows you to defer your taxes to a future year, ideally when you retire. When you put money into an RRSP, you will be able to reduce the amount of taxes you pay this year and delay those taxes by 30 or 35 years until you retire. At the time of retirement, you should have a very smaller income, so you would be in smaller tax bracket and you would pay less taxes in Canada. The second benefit of an RRSP is that it allows your investment to grow tax-free because RRSP is tax sheltered. So any income you earn inside your RRSP will not be taxed, and any dividend, interest, or capital gains you make will be tax-free, and so your investment will grow much faster inside an RRSP than they would in a non-registered account. The tax sheltered nature of an RRSP is very similar to TFSA. The main difference is that with the RRSP, you can reduce your income tax today by maxing out your contribution room every year, and you will be paying lower taxes many years later at the time of retirement when you start withdrawing that money out of your RRSP. RRSP is not a product that you can buy from a bank. Rather, RRSP is a type of account where you can hold almost any form of investment, just like TFSA. You can hold stocks, bonds, ETFs, mutual funds, GICs, REITs, and cash. As long as these assets remain inside your RRSP, you won't be paying any taxes on them. You will only pay taxes when you withdraw this money outside of the RRSP. I want to highlight one point here. Just because you can hold cash in your RRSP, please don't treat this account as a high interest saving account. The main benefit of an RRSP versus saving account is that you will not be paying any taxes on investment income. Another point is with the savings account, you will hardly receive a 2% interest rate, which is not going to beat the inflation, and ultimately the value of your money will decrease over a period of time, and you are wasting the benefits of having RRSP room available to you. But if you invest the money with good funds or stocks and ETF, it will surpass the inflation rate, and ultimately your RRSP investment will grow faster based on compounding effects. Now let me go over the rules of an RRSP. You are eligible to have an RRSP account as long as you live in Canada and you have earned a Canadian income in previous years. You can open up an RRSP account anytime. There is no minimum age requirement. You can open more than one RRSP account with different financial platforms such as a financial institution, credit union, or insurance company, but the total amount you contribute to all of your RRSP account cannot be more than your available contribution limit. If you want to transfer funds from one RRSP to another or from one issuer to another, there will be no tax consequences if your issuer completes a direct transfer on your behalf. You can also set up a self-directed RRSP if you prefer to build and manage your own investment portfolio by buying and selling different types of investments. Questrade and WealthSimple are the base platforms if you would like to open self-directed RRSP or TFSA accounts. You can find my referral link for the Questrade and WealthSimple in the description below. If you open through my referral link, then you will receive some promotional offer, plus I will receive a very small referral fee. Be careful when you manage your RRSP investment by yourself, because RRSP will be your lifeline after you retire, and you don't want any financial stress in your retirement. So if you don't have enough knowledge about investment, then consult a knowledgeable financial advisor who can guide you. Your RRSP contribution room starts building the year after you start earning the money. If you are 15 years old and have a part-time job, you can't open up RRSP yet, but next year when you file your taxes, you will have your RRSP contribution room available. So you can open up an RRSP account and start investing. Contribution room is based on the income of previous years. So if you just move to Canada, or even if you have a job right away, you have to wait until next year to open up an RRSP. There is no minimum age requirement, but you have to be under the age of 71 to open an RRSP or to contribute to an RRSP. The contribution rules are very simple. Your room only depends on your income and not on your age. Every year, your RRSP contribution room will increase by 18% of your earned income in the previous year, but it is capped at a maximum amount. For example, in 2021, the maximum contribution room was $27,830, but it was increased for the year 2022 as $29,210. So if your earned income was $100,000 in the year 2021, this year in 2022, you will have gained 18% or $18,000 for your RRSP contribution room. But if you have earned $200,000 in 2021, then 18% of that is $36,000. That is above the maximum amount for your contribution for 2022, and you are only allowed to contribute up to the maximum amount of $27,830 based on the government guideline. One of the best thing about RRSP is any unused contribution room will be carried forward to a future years. So don't worry if you can't contribute to RRSP this year, because you won't be losing any room. You can keep track of your RRSP contribution room by checking your notice of assessment after filing your income tax with CRA, or you can find this by logging into your CRA account online, where you will be able to see total available contribution room, including any unused room from the previous years. Keep in mind that the RRSP contribution room will be adjusted if you are participating in a pension plan offered by your employer. Many employers offer pension plan matching program. For example, if you are contributing yearly $5,000 to the pension plan directly from your salary, then they will also contribute $5,000. This is still a great deal because you are getting free money from your employer. However, this yearly total contribution of $10,000 will be adjusted in calculating your final available RRSP room. So make sure that you consider this when you calculate your RRSP contribution room. Now, what happens if you over-contribute in RRSP? For over-contribution, the penalties will be severe. Over-contributed amounts will be penalized with 1% fee every single month or 12% annual fee, which is massive. So make sure you stay within your limits. Technically, the government allows you to contribute $2,000 above the contribution room before you get penalized. However, this wiggle room is meant to protect you in case you make a mistake. This $2,000 now cannot be deducted from your taxable income, so try to avoid using it. For example, let's say I forgot that my RRSP has been maxed out and I added $12,000 to RRSP. So I won't pay any penalties on the first $2,000, and I also can't claim this $2,000 to the taxes, but I still have another $10,000 above my limit, and so I will be charged 1% or $100 every single month until I withdraw all that excess amount. Your over contributions must be reported to the Canada Revenue Agency CRA within 90 days after the last day of the tax year when you over contributed. Reports filed after that deadline may be subjected to an additional penalty equal to 5% of the taxes you owe plus an extra 1% for every month to a maximum of 12 months. So be careful about over contribution. Now let's talk about RRSP withdrawal rules. Any income you earn in RRSP is usually exempt from tax as long as the fund remains inside the RRSP account. However, you generally have to pay tax when you cash in or make withdrawals or receive payments from the plan. Usually, a portion of the withdrawal will be withheld and remitted to the government as a prepayment of the income tax you will owe for the year. Depending on the amount of taxable income you are earning in the year of withdrawal, it may be beneficial to put off making withdrawals until a year in which your taxable income will be lower. In addition, RRSP withdrawals are not added back to your contribution room in the year following the withdrawal. However, with the home buyer's plan, you are allowed to withdraw up to $35,000 from your RRSP without any tax implications when you are buying your first dream house in Canada. Additionally, the lifelong learning plan allows you to withdraw from your RRSP to help pay for full-time education or training for you or your spouse or common law partner. So in summary, I have covered all the basic details of RRSP, including its basic details, its use, contribution and withdrawals, and over contribution rules, investment options, and so on. I am a licensed financial professional and my specialty is I help and teach people to save the money as well as how they can create and preserve the wealth. So I would be more than happy to connect with you if you need more details about investing in RRSP. You can find my contact details in the description below. So thank you guys for watching my video, and be sure to like, comment and subscribe if you found this video helpful. Your comments really help me to build the channel. Hit that bell icon to get notified for my new videos. You can also connect with me on Instagram or Facebook through the links mentioned in the description. I will see you guys on my next video. Until then, see you and goodbye.